Hey everyone, it's Mike from Orderflows, and this is the Orderflows market recap for Tuesday, July 31st, 2018. And it's kind of interesting day, some big movements late in the day in some of these markets. And before I begin, let me just go over the brief disclaimer again. The reason why I do these presentations, is to give people sort of an insight into order flow analysis that they probably wouldn't have. I'm not out here saying this is the only way to trade. You have to do it like this. No. People that know me, people that follow me and talk to me on a regular basis about trading, understand what is involved in trading. If you're just coming to the markets thinking that, order flow is going to solve all my problems, no, it might not. It's something that you have to put time and effort in to learn. So this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. My past performance is not going to be your past performance. Or let me rephrase that. You're not going to trade the same way as me. Everyone has a different way of thinking, and sometimes I've come to realize that one of the reasons why a lot of traders lose money is they like to start handicapping a trading method, rather than taking the trades when they're there. You say, well, I don't know. I took that last time and it didn't work out, and I don't want to lose any more money, so I'm not going to take the trade the next time. I'm going to wait for it to start winning again before I start taking the trades. Well, if you're doing that, you're not going to be in the game when the moves start happening. But anyway, I digress. I could go on. I have conversations with people, and it was really kind of mind-boggling what sort of the way they approach trading. I'll save that for another another video. But S&Ps this morning, this is an 8 range chart, and this is the Orderflows Trader 2.0 version, the latest version that we have. And there's a few new tools that we've added in there. Trap traders, you can see here, traders are trapped right up here. We're looking for a market to come back up to these highs, break out, make, cash just opened up. We rallied up here. Then we're sort of hanging around here. People are trying to think, oh, hey, are we going to go start rallying back up to, above 18.5 or not? But also, these people are here, these traders are trapped. They're stuck. They're long and wrong. They're trying to get positioned in here for the market to go higher. They're not. And the market starts selling off. Boom, boom, boom. You come down here. You got prominent point of control. So you got some supportive buying. It tests that in the next bar. Then, it rallies up a little bit and closes that bar pretty much unchanged. Then it just sells right back down to that level, blows through it. Then you come down here to another area of supportive buying. You can see in here with the prominent point of controls. Now, why is this important is, you look at the volumes, you got 500, 1700, 900. Okay, even 200 here, you got unfinished auction. I'm not a big believer in unfinished business, but it was just on my mind because I was talking to somebody about it last night. And what happens? Well, the market next bar sells off right down here, but then we start trading around there. We got another prominent point of control. We got some more supportive buying going on down here. You can see the blue, right? The blue, that means supportive buying. The pink up here, the magenta, that's resistance selling. And what does the market do? It rallies up to an area where you got resistance selling, and that's sort of that area where earlier, if you were to look left, you can't trade to the left of the chart, but you can look left for levels in the market. This was an area where earlier you had some trap traders. And why is that important is because, when the market starts coming back up there, what's going to happen? Are you going to see that same buying that you saw earlier, or are you going to see the same selling that you saw earlier, right? When you have traders that are trapped, what is it? It's people buying. They're trapped because they're buying it because they think the market's going to go higher, but there's supply there. And then their buying is met with supply, and then the market often sells off. You don't have trap traders around up here, but you can tell in the order flow that there's resistance selling if you're using some of my tools. Now, the other thing to sort of keep in mind is, you got a swing high up here. It sort of corresponds to this earlier high, but watch the delta. What are you seeing up here? Swing high. If like I said, if you look to the left, you sort of got this area over here where, this I hate to call that a swing high because, this was really the swing high and we just sort of hung around here. But, that there's some resistance selling up there. And so there's a potential for the market to possibly sell off. So what are you going to look for? You're going to look for signs in the delta. Minus 200, minus 475, minus 500. And what happens? The market continues down. Gets down here, we're into some positive delta. Market trades back and forth, rallies up a little bit. Maybe this is half back here between this high and this swing low. Sort of starts coming back, but then watch this delta. It's just positive the whole time. Start rallying. This is 9:30 in the morning. Watch these point of controls. All the way up, point of controls are higher. That's a sign of a market. You're putting in higher point of controls in the bar. That's a clear sign of a market moving higher. It's going to be your support. And when I talk about if you're sticking your neck out and saying, no, this is my swing low. Okay, so you're going to start, how can you confirm it? Well, you watch the point of controls, watch where the market comes back to. You have a point of control right here, market pulls right back to it. You have a point of control here, market pulls back, gets to it by a couple of ticks. Point of control right here, it holds by, it gets to it by 1 tick. Next point of control, right to that point of control. Next point of control, 2 ticks through. Here's 3 ticks through. This one's above it already, so you're not even pulling back to those point of controls. The market's got a full head of steam at this point. And obviously you're putting in some big positive delta numbers, 3,000, 7,000. As you come up here to this area up here where you get a divergence right up here. Look at this. You have a divergence. You got your negative delta. You don't have a ratio though. You just got, your regular number up here, 6.49. It's just, regular order flow going through here. Does the market sell off? Yeah, it sells off about, from say what area is that, 22.5, maybe down to 19, down in here. But that's not much of a move, honestly. It's just sort of going sideways. This bar is interesting. You got multiple imbalances, selling imbalances, 1, 2, 3 in here. But watch the delta. What are you looking at right now? You got the high of the day here. Negative delta, negative delta, negative delta, negative delta, negative. One positive, okay, negative, a positive, negative. At this point, it's predominantly negative delta. And what's the market doing? It's just going sideways, but it's right off our high. So we got negative delta. So there's a lot of there's supply up here, right? There's people coming in here, they're willing to sell up here. They're willing to sell. Then in this bar here, what do you get? Right here, you've got a prominent point of control. You got some resistance coming in here. You could even see it in the order flow, 1,000, 1,700. What happens is, over the next couple of bars, the market sells off from 20 down to 16, where you're just sort of going sideways before you break some more down to 15. So, this is a great sell right here. If you could have got short around the 19 or 20 area, you could have taken it down for about 5 points at least. And then when you start rallying, we got this swing low here. And this was interesting. I remember looking at this and thinking, this one's interesting, the way it's breaking, the way it's unfolding. What do you got? Well, a couple of things. You're coming down into a potential swing low. You don't know it at this point when you hit the swing low if this is the low, or if this is going to be the low. But this bar here with the ratio of 2.476 doesn't look like it's going to be a low. It's got a strong negative delta still. Next bar, still negative delta. Next bar, still negative delta. This bar positive. Now, what's going on is you got sort of declining delta, minus 2,000, minus 1,600, minus 1,000. And so what's that telling you is, well, the aggressive sellers are still there. They're still present, but they're sort of lightening up, getting a little bit weaker. Then here it turns positive. You trade almost 20,000. You trade 19,700 contracts in this one bar, and you got a delta 78, which is pretty much nothing. It's pretty much, might as well just be zero. But it's positive, small positive. And next bar, 3,000. Next bar, 6,000. Okay. And this is important because you got negative delta getting weaker here, minus 2,000, minus 1,600, minus 1,000. Then it turns positive, 78, 389, 3089, 6592. Here you got multiple imbalances as well. So you take those two things, put them together, and it could give you a nice trade. You're going into the cash close. That's why this one bar here has got 41,000. Next bar has got 51,000. But cash close, you see a shitload of orders coming through always, every day. It's like the busiest time of the day. That's when everyone they're trying to get their futures off against the people that run the index books. That's when they're most active. But anyway, I'll get into that another time. But what are you seeing? And then you got multiple buying imbalances in this bar. So you're seeing a shift in the delta to aggressive buyers. Is it worth taking a shot on this? Yeah, heck yeah, I think it's worth taking a shot. Where you're going to put your stop is just below the swing low here. It's a little wide, but this is a 8 range chart. So, what's your potential? Your potential, if you're getting long down here around, the 18 level, you could be looking up here at 23 or even earlier up there at, 25. And what happens? The aggressive buying, we finally get through all that volume. We turn through it at the cash close, and then the market picks up its head of steam again and starts rallying all the way up to this high up here at just before the futures close. And up here you got prominent point of control, you got a ratio, you also got the divergence, but and that's not a trade you're really going to take at 3:30 in the afternoon getting short. You got a short time period to even bother with that trade. But that to me I thought was very interesting, very interesting today. Interesting move in the eminis. Now bunds, I'll just go through that really quick because bunds is, people always ask me, hey, I got a regular job but I want to trade. What market should I trade? Well, get your ass up early and start trading in the morning before you go to work. Trade bunds. Bunds is a nice contract, and futures open at 1 a.m. Chicago time. Bunds, the cash market opens at 2 in Germany. So, can you trade them pre-cash? Well, yeah, you can. Volume's decent, but you're going to get the more truer moves when the cash market's open. Just as the futures also trade for hours after the cash close in the bunds. But you get good moves in the bunds. It's a nice contract to trade. But you could start trading at 1 or 2 in the morning. Don't wake yourself up at 1 a.m. to start trading. You could wake up at 2, get an extra hour of sleep. But, so you're rallying up here. So, here, right on the open rather. I'm not going to take a signal right on the open, even within 30 seconds after the opening. Give it some time to breathe. Here you got a divergence, nothing special. Here you got another divergence, nothing special. There's no ratios that go with them either. But, so I'm really not interested in those two trades right there. But, we start selling off all negative deltas. You did have this bar here about 134 this morning. Prominent point of control. Get a little bit of a sweep, but not much. It's kind of light volume, 47.34. Then you come down in here and you make a new low. You got a divergence. But the next bar, you got a ratio. Okay, I like that. But what happens is it runs right up into some resistance selling. You got a prominent point of control up here. And this is where it got interesting. Sell off to an area of support, prominent point of control here. So I've got resistance, I got support, basically from 80 up to 87. And you can see how it just sort of hangs around here, trades back up to, 87, comes back down to 80, goes back up, sort of comes back down. Finally, we break through a little bit. We get all the way up here to 90, 91, where you got the prominent point of control. Then we just sell off nicely down to the next support area down in here. This was a nice move as well. I don't know if you'd be looking for it to, just keep bouncing around. We finally broke out to the upside before you sold off. These are those head fakes, where it's like people think, well, hey, we're breaking out finally up here. Everyone wants to pile in and start getting long. Those are those head fakes before the market starts to sell off. And we came down, and so, be careful. Don't be thinking that, hey, I'm going to buy it again here. We're going to go back up. That's not going to go back and forth all day long. But, sometimes people like to think that, and that's where they go astray and end up losing their money. Okay, so we come down here. You got divergence, prominent point of control. This one fails. It's met with the red bar here. Then we just sort of go sideways. You got divergence going sideways, nothing special. Then we get down here, another divergence, nothing special. That's why I say don't just trade divergences, because on a market that's moving, a trending market, you're going to get you're going to get failed divergences. Failed divergence. It's like you'd be trying to pick up a falling knife, basically. Now this one I thought was interesting. We had this swing low, or the low of the day rather, with a ratio, which I like. Then you got a stack buying imbalance, which is a few things that I like in there. I love getting buying imbalances at lows, swing lows, or lows of days. We rally, not much, about 6 or 7 ticks, just kind of hang around here, go sideways. This is something here in the order flow, but I'm not gonna get into it. It's basically a sign of, you got your point of control right in the middle of the bar, but it's a nice imbalance in here that sort of portends a bit of a sell-off. You come down here, another divergence that fails, another divergence that rallies up a little bit. And like I said, if you're looking to trade divergences by themselves, don't. Look for something else in the market to help confirm that hey, maybe this low can hold. That's why I thought this low can hold, because I saw aggressive buying coming in. I saw nice positive delta, and it's getting a bit stronger as well. Unfortunately, it just sort of went sideways until you got some bullish signals there in the order flow. And what happens? Another divergence, they both fail. What you're looking for is something else, like a ratio. That's why, I talk about ratios. It's not just about looking at a number and saying, oh, this has got a bullish ratio or positive, or a bearish ratio. No, you got to understand what the ratios mean and how to use them. Then you get down here to these lows, divergence with a ratio, divergence with a prominent point of control. So I got two divergences that I like, a double bottom coming in here. To me, this is go time. What do? You got to position yourself long. First bar, yeah, you had, it gave you the signal. Second bar, it also gave you the signal. Even if you got long off the first bar, you're not going to be getting stopped out, because your stop is going to be, just below the low of the day here, right? You're getting in somewhere around 45, 46. Your stop is below 40, 38, 39. Even if you have it at 40, just which would be a new low, you're risking 5 ticks, right? So imagine you're getting in here at 45. What happens? Market rallies. Look at the delta again, positive, positive, positive. You're starting to get string together positive deltas. The market's not going to move away from the lows, move higher from the lows on negative delta. Getting stronger, it's going to move off the lows on positive delta, getting stronger. And you can see how it rallies up there. Then starts coming back down. Get down in here, 830, you got this prominent point of control here. So, you got some support. What happens? Rally up, come right back down, miss it by a tick. You just sell off to 1 tick above that prominent point of control before you rally back up. What do you rally back up to? A resistance area up here. Now, people say, well, you had that swing high here. You could throw an offer in there. Yeah, you can. I mean, there's nothing to say that, oh, you wouldn't do that, when you're trading order flow. Of course not. You'd have it in there, then you'd see this prominent point of control, and you think, like, yeah, maybe you throw another order in there to get short up there, knowing that, hey, I've got some resistance selling up here, that this, this retest of this swing high is got a good chance to work out. And when we sell off where? We sell off right down here. We got prominent point of control, it rallies up, and it breaks down again. Then you get down here to this other low. Swing low. What do you got? You got a prominent point of control again. Watch the delta. Say I don't know if I want to take this trade. It's got a small delta, 27. It could have been easily been negative, but if you start analyzing the delta, you'll realize that the way it sets up like that, that's actually quite bullish. But then watch the delta. Say you're not convinced here. You went from 27 to 206 to 1700. So even if you get in late here, so get in on this bar after oh my gosh, I missed it. Went from 27 to 200 to 1700. I better get long, and you throw a bid in here. You're chasing the market. You're long at 52. It rallies all the way up to 62, where you got a prominent point of control for resistance selling. Then we just sort of bing, test it, come off, test it, and close for the day. So, I mean, that was the bunds. It was quite interesting there in the bunds. Let me see if I got time to go over the crude oil real quick. All right, so I'll talk about crude oil real quick, because, the interesting trade in the crude oil wasn't based on prominent point of controls, but it was based on something slightly different, but a new feature in the Orderflows Trader software. Now, look at this. This is 8 in the morning Chicago time. So we got the low of the day. We've got a divergence here. We rally up. Where do we rally? To this area up in here where you have multiple imbalances. Another bar, multiple imbalances. You got a stacked imbalance put in there. This is why we have multiple imbalances highlighted, is because so you can see that, what's happening in the market, and, make that decision. Should I get, is this a potential swing high or swing low? In this case, is this a potential swing high? Well, you got some selling imbalances up there. And what happens? The market sells off to this area down in here where it's just, prominent point of control, tests it, rallies back up. And then you've got a bearish prominent point of control. You sell off down, here to this swing low. You have this one here where, this market is moving there's fast market conditions. That's why it's like 50, all these zeros in there. But then you get down here and look at this low. You have trap traders down here. You've got a bullish ratio bounds low, and the market rallies up. Where does it rally up to? It rallies up to this bar where you got prominent point of control. Market, rallies, doesn't, I don't say comes off. This bar closes lower. Next bar rallies back up. And where does it hold? It comes right up here to this prominent point of control both times. So again, if you're looking for, a second chance entry, yeah, you can get it probably on these prominent point of controls. Market sells off, and this one, this is why I love this feature, the multiple imbalances, because you're not going to notice this. Our eyes are trained to look for a stacked imbalance. They're not trained to look for multiple imbalances. And look at how this delta is appearing, 21.97, 176. It just sucks that it runs into this resistance selling, which sort of corresponds up in here, but then it comes right back. So, even if you got long, and, oh shit, I got this prominent point of control, you got out of the position. The fact that we finally broke through it, if you're watching the delta, is, and couple that delta with this multiple imbalances here, you could be comfortable getting back into the trade. Then it rallies up into this swing high before selling off. And again, watch the point of controls. They're all being lower, lower, lower. Delta, all negative. Went from, it was getting a little bit weaker, 361, then the 139. At this turn, it's minus 174, minus 167, minus 202. You can almost stick a fork in it, that it's done. So that was what, I felt was the most interesting thing, is about using the multiple imbalances in Crude today, to sort of, help you pick up a few things. Here, sell off from this prominent point of control, so not a big move, about 10 ticks. Again, another 10 ticks. Here, next bar starts poking lower before it comes back up. Then again, what does it do? It trades back up here, comes off again. Late in the day, there's some, big move in the Crude. I don't know if anybody noticed it. This is what it looks like on a 15-second chart. I think it looks more 15-second chart. We broke 68.75 all the way down to 67. What is that? 95. So about a buck move, almost about 80 cents. So anyway, that's what I just basically wanted to cover today about what happened in the markets. Now, again, it's what you got to realize about order flow is, order flow is a tool, okay, and you have to use it as a tool, right? It's not a red light, green light system. You got to think, I see people coming out there, trying to come up with these methods that don't require any, any thought process. Well, what is that? Is that trading or not? The best decisions are the ones that you make in life, and I don't know, I just a little discouraged because I was going back and forth with somebody on email, and guy was complaining that basically he wanted everything for free, but then they say, well, then he'll pay me. It's like, I got programmers to pay and stuff like that. So, if you're serious about if you're serious about trading, look into order flow. If you're just gonna think that trading is going to be like some method that is going to turn around your life in the next 24 hours, it's not. But if you want to put in some effort to understand how the markets move, and history repeats itself, then order flow, I think, is going to be a great tool for you to use in your trading. So thanks everyone, and have a great day. Bye bye.